What's up, guys? Welcome to Roensch Capital Charts. In this video, we're going to be taking a bird's eye look view at Nvidia stock, ticker symbol NVDA, laying out the most important psychological areas that I anticipate we're going to see higher volume and decision making around, as well as trying to pull out as much possible bias as we can for the month of April. Now, we're going to do this using a variety of relevant time frames, the most popular time frames, the most eyeballs, right? That's all I'm interested in. Also utilizing the most popular moving averages. The reason we're doing that is self-fulfilling prophecy mentality, okay? And then the options chain to really give us an idea of expected move, implied volatility, and ratios that give us a little bit of insight into some hidden bias. Now let's get started here on Nvidia with the 4-hour chart. Listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. Now let's take a look. So here on the 4-hour chart, to me, the most relevant area to look, you can see that at least at the time of recording this video, for the last couple of weeks and going back months, we have seen that 50-period moving average be an incredibly in-play region. So bulls, heading into and throughout the entirety of the month of April, I would love to see Nvidia stock reclaim that 50 period and kind of let's see a repeat of what we saw really from late February into like early March. Get above that level, put a little bit of distance. I have no problem testing the level as long as we get big high volume pullaways. You know, we got like a similar retest here and a higher volume pull away, just slightly above average on that volume. That shows a big sample size of the market coming in at that time and saying, okay, at this very moment, Nvidia belongs still above that 50-period moving average. And by the way, the reason we're looking at this at all is not because the 50 period is some magical indicator, but because the 50 period, as well as the 200 period, this darker gray line down there, are incredibly popular. The most popular indicators we could possibly throw on a chart, the 4-hour chart, as well as the daily and weekly, which we'll look at here in a second, very commonly utilized time frames, leads to that self-fulfilling prophecy effect. So bulls, on a chart like the 4-hour, this kind of deal back here is kind of my best case scenario. We're above that level, showing strength, okay? Not leaving a lot of doubt in other bulls' minds who are also looking at this, funds, institutions, and allowing that 50 period rising at a sustained rate that allows that 50 period to rise along with it, moving up that psychological barrier, staying close to the stock, but anytime we come in for a retest, we see a strong high volume bounce away. Okay, that's going to be very important in the macro view over the course of the entirety of April. Now, bears. You guys, you haven't had a lot of opportunity in the last few months to really prove yourself below that level. You know, we saw here in mid to late February, spent maybe a day and a half down in that region. But for you guys, it's going to be really important, and this may change by the time you're watching this video. That's okay. This is all applicable. We're looking at this with a bird's eye view, right? It's going to be highly crucial for bears and bulls. This is what you would not necessarily want to see, to claim that 50 period as a longer term, like over the course of a few weeks, resistance level, where we break down beneath, see any upside test of that 50 period, we reject on a slightly above or very much so above average volume. And I think very important for bears, see a flattening out, if not a curl to the downside in that 50 period moving average. That starts to allow a little bit of doubt to creep into a lot of bulls, a lot of funds, a lot of institutions, heads that are sitting long. And the truth is, for people who are and funds who are trading off of the technicals, which of course we're looking, you know, a month, anywhere from a few weeks to like a month and a half out at this point, that is in the grand scheme of things still a shorter term time frame, and the technicals are most important in the shorter term, and then fundamentals, the longer you go out, they certainly take over. But for a lot of funds and institutions, anything under 3 to 6 months, and the technicals likely still take a front seat in those morning meetings compared to fundamentals. Of course, unless, you know, as far as profit taking and adding, trimming, things like that are concerned, which of course drive shorter term movement in the stock, which is really what we're after here. And bears, you know, believe it or not, if we were to see this 50 period flattening out and curling downside, I think a lot of bears are going to have their eye on that likely still ascending 200 period, since it is a slower moving average, as a potential target or potential touch point, at least for a lot of shorts. Now, bulls, it's pretty clear that a lot of your eyes are going to be on $1,000 a share, which brings us here to the daily chart, where we will start talking about the important levels that I'm paying attention to here. And let's zoom in just a little bit to get a bit more contextual where the stock currently is, and the more likely region for the entirety of April. Now, what I'm after here on the daily are the most obvious technical and psychological levels. Now, keep in mind, technical levels over time typically become psychological levels, and psychological levels over time almost always become technical levels. So let's draw out these levels of interest that I'm paying close attention to, throughout April, heading into and throughout April here on Nvidia. 750 is a clear technical level that has since become a psychological level. Okay. If we look at this region, I think really 850, it's hard to argue that there's certainly not some kind of psychology sitting around 850. $900 in recent time has become an area to watch, anywhere from like that 9 to 920 region. I'm going to draw it at 9 just because I like the psychological round number aspect of that. And the very obvious level here in the near term that everybody's watching, I'll just draw this all the way back here, $1,000 a share. Okay, that is a huge target that I know a lot of bulls are watching. Now, bulls, you'll notice that we have a little bit of a tighter channel that could potentially open us up for a bigger 100-point move. Of course, that all-time high is sitting at 974. I think the most important thing throughout the month of April is to focus on reclaiming 9, showing some comfort above that level. Listen, I wouldn't even mind if Nvidia consolidated for a couple of weeks, really looking in the longer term. However, a reclaim of 9 and a hold, any retest we see high volume bounces, that could potentially set the bulls up for a hard run through this kind of no man's land up toward $1,000 a share. Stocks typically tend to move quickly between levels of interest, though in that case the market has to be comfortable holding above $900 a share. Now, you bears, a very similar setup here to the downside. You can see these channels are almost a mirror image of each other. Bears, I think the focus here for this month is going to be a downside break of 850, holding beneath 850, since we've seen kind of a table form there. And I think your guys' goal is really going to be to get down through 8, that round number, though we haven't seen that turn entirely into a technical level. It wouldn't surprise me if we did, if we were to see downside in the stock, heading down toward that more realistic target level of like 750, which is truthfully a relatively obvious area of technical interest. Now, really quick, before we move on to the weekly and then the bias that we can pull out of the chain, implied volatility is currently sitting, compared to the last like 5 months or so, 4 or 5 months, in, I would argue, the mid to slightly higher range compared to that last 4 or 5 months. Why is that important? Well, it doesn't show the chain as incredibly insecure about where Nvidia currently is, meaning a very, very high implied volatility would show the options chain pricing in a lot of volatility. Typically shows a little bit of insecurity if the stock isn't necessarily so comfortable. That's not the case here on Nvidia, but it's also not incredibly low either. A very low implied volatility shows the options traders pricing in a lot less expected volatility, which typically shows a level of comfort. Now, if a stock is tanking off and implied volatility is very low, like the lowest it's been in 6 months, that's not a great sign for bulls, because it shows that the traders are pricing in a high level of comfort at the new level, which is quite a bit lower, right? That's not a great thing to see. But also understand that implied volatility is going to impact the pricing of your options, your purchased options, if you hold any or are looking to do so. The higher IV goes, typically the less, or really I should say, the higher the likelihood of some IV crush risk coming into play. And the lower implied volatility goes, compared to your relevant trade time frame or your intended trade time frame, the more favorable those conditions become for options buyers to buy when IV is low, and that Vega value squeezed out of the contracts to look to capitalize on a return to equilibrium in IV. Now let's just really quickly take a look at the weekly chart. Now what I want to do here is look at the volume Okay, you can see the next earnings on Nvidia. We're looking out to May 22nd. So no earnings here in April for Nvidia. But look at these weekly volume bars. In the entirety of 2024, as of the recording of this video, there has only been 1.5 red weeks. And if you compare that kind of streak to the last like 2 or 3 years, that's really nothing that we've seen until, 2024. Now, it's important to understand there's, of course, 2 ways to look at that. There is, the trend is your friend kind of mentality. The bulls are in control. That may shift if we hit $1,000 a share, that kind of mentality. But understand, bulls, that you're going to have a lot of bears looking at this with the contrarian-like mentality of, listen, this can't go on forever, and trying to guess the top. There's danger in trying to guess the top, but the longer you have a streak like that go on, the more bears you're going to have trying to guess the flip. So bulls, just understand that. Now, the bias coming out of the options chain. We'll first take a look at the put-call ratio, and then we'll take a look at the expected move. Okay, so we have the put-call ratio up top. The lower this goes, I know this is a little bit confusing, but the lower the put-call ratio goes, the more calls are being purchased. And really what this is measuring is the put-call ratio of contracts in terms of open interest. So contracts that are actively out there. You can see that 1.0, which is, right around here. Okay, sideways, right? Right about there is 1.0. That's even. The higher that goes, you have more puts than calls, and the lower this goes, you have more calls than puts. So as Nvidia has gone up, we've seen more calls being put into play, relatively consistently until a little bit more recently as the stock came into about $1,000. But that ratio is still relatively sitting low, again, which shows more calls than puts, currently sitting at about 90, 0.9. Now, the expected move. Okay, let's take a look at this. If you don't know what expected move means, that is a legitimate technical term that gives us the expected move being priced into the options, both calls and puts, which is measured by the implied volatility at each expiration date. In very simple terms, by the last expiration date on Nvidia in April, which is April 26, 2024, the expected move is plus or minus $123 as of right now. So if we head back to, let's do the daily chart here. If we head back to the daily chart, that basically, and we're probably going to have to, here, let's do this. $123 by the end of April. We're essentially looking at, the options chain is pricing in that the stock is as low as like 760 by April 26th, or as high as over $1,000 a share. So just be aware that the options chain is currently pricing in by the end of April below $800 a share or above $1,000 a share. The chain does not see this consolidation within this 850 to 900 channel continuing through the end of April. Of course, the traders can be wrong. However, when you get a big sample size of options traders coming together, IV, you could almost compare it to like the term I believe is the line in like sports betting. Sometimes it shocks you how accurate that may be. I'm not much of a sports bettor, but of course it's not always going to be that accurate, but it oftentimes is. But those probabilities, right now back to the options, are being priced in by everybody, by a huge sample size of options traders, and that is currently what the market is seeing in terms of volatility through April. So then it's up to you to determine, based on all the analysis that we've just done and anything that you do on your own, what is your bias? And that's how you can look to position yourself to potentially best capitalize on the opportunity. And listen, for example, there's opportunities every which way. If you're someone who's like, ooh, listen, I think throughout April, we're going to see Nvidia basically just consolidate between 850 and 9. If that's you, and the options are pricing in, 760 to $1,010, that might be someone who thinks about some iron condors or something to that effect. Lots of ways to make money here. Listen, if your goal is to try to expedite the process of going part-time or even full-time as a trader, listen, I think you'll find the Roensch Capital Gold server incredibly valuable, if not just helpful. I'm working with not only my Platinum members every day, but the group itself, sending out my scalp setup alerts, in-play stock alerts, unusual options activity, as well as my swing trade setup alerts when they come around a little bit less consistently, but when they come around and they get alerted. The link in the pinned comment, that'll allow you to get grandfathered in at the current rate, so you'll be kind of immune to future price raises. But listen, as always, I want to make sure you're aware. I learned how to trade without spending a dime, at least my market tuition was perhaps high, right? But I didn't spend any money on courses or coaching. Looking back, I think it was helpful that I did it for free, but it certainly took me longer than it should have. So if you want to go the free route, I encourage you to do so. But if your goal is to really try to expedite things, I think you'll find the server invaluable. I appreciate you guys. If you got value out of the video, please subscribe to the channel. I am not only doing these monthly analysis videos every month on Nvidia, but I'm also covering Nvidia daily in a shorter term context. You'll come to find, if you subscribe to the channel, that context is the word always around here. Context is everything. So listen, hope to see you in the comment section of future videos, and I'll see you in the next one.